Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday, as we had one of those days with not a whole lot of movements. A good friend of mine, Eric Ochutnicki, said it was a great textbook end of the month closing. So take that for what it's worth. A little bit of sell-off at the end of the month. So let's go ahead and dive right in. For those of you new to the channel, make sure that you click the subscribe button down below and you subscribe to the channel. And I would appreciate a like. Throw the video a little bit higher in the rankings so that more people can see what we're doing. Let's dive right in. So looking at the S&P, giving the S&P a little bit of love this morning. So we are basically flat from our close as of yesterday. Not a whole lot happened in the overnight hours. We did sell off pretty hard yesterday, and this is a case where we originally had set up the trade for the for this using that dashed line theory, where we're waiting for price to come in and then we get short as it comes back out. And the downside of the dashed line theory, sometimes you're not going to get filled. Now, I will tell you, even if I had not done the dashed line, I still wouldn't have gotten filled. I would have missed it by a tick. I mean, literally nicked it and missed it by a tick. And so I'm okay with that. You're going to get days like that where you miss some of those trades and some of those opportunities. One of the things I was considering was if you do have sometimes a level where you're feeling like there could be a breakdown from an area and you base in front of it, you can use that a breakout trade to get short below it and kind of a deeper confirmation entry, if you will. I did not. I actually just kind of steered clear of it yesterday. When you're staying in between these 1% moves, it's kind of hard to really get a whole lot of traction with trend trading opportunities. And when we look at trend trading, it's really tough to trend trade when the market's just doing this, right? We're looking at a 4-hour chart. Let's move even to a daily chart. When we see this pattern, it's really tough to really get any sort of trend trading going on. There are still a lot of areas above us of selling that we have to get through before price is really going to go many places. So just keep in mind, but there's also some areas below of buying opportunities. So as far as where we stand today, I've got a couple of areas that I have added to the chart. This area here I found on the 15-minute time period. I was actually doing a little lesson yesterday with a subscriber of mine, and he and I were going over this, and it would be a 15-minute level. So let me turn that to pink or purple or whatever we want to call it, because this little 15-minute level could be a reversal opportunity as well. I do think if we can break above this 2655 area, that there's room for it to run a little bit as well. So if you wanted to take a long this morning, I certainly wouldn't be object to that either. Looking at the NQ, so the Nasdaq, we are basically flat from the close yesterday as well. Not a whole lot of opportunity here, any different than what we've got in the S&P. We do have this sellable item up here. This is the leftover from the strong move down on Friday. I think that there is, once again, if we break above on this one, 66.40, I think there's room for it to run a bit higher for a potential long. But then there's also, just a spot if it goes below here, 66.50. So in my mind, I'm going to leave both of these markets alone today. There's really no defining reason for me to force something and to jump in. Crude oil. So crude oil really rocketed up yesterday as opposed to the market coming down. Crude oil rocketed back up, and we're retracing much of that move. We've actually retraced most of that move in the overnight hours. But once again, crude oil looks a lot like it's hard to trend trade in this environment, right? We're still sitting above this area. This area has been, this $67 a barrel area has been a pretty strong area for a while. I'm going to keep this line intact. There's no reason to change it. I might want to consider utilizing this area up here. My only problem with this is that this started really at around the London Open. So right around the European market open is when we started to sell off in oil. Looking at gold, so gold, we had a breakdown short in gold earlier in the week, and that breakdown is continuing its move. So hopefully if you caught that breakdown, you're still doing okay with it. There is another opportunity to sell a retracement back up to this area right here. So I think if we get a rally, a pop back up into here, there's a decent little retracement. And the reason for that is because this was an old area of support. This old support could become a new area of resistance in the future. Looking next at our bonds, Aussie and Canadian. So our bond market, we have a fair price value area above us in here, where price was chopping along sideways before a big move down. There is a good opportunity for a reversal somewhere up in there. Looking at the Aussie actually took a little breakdown yesterday in the Aussie below this area here. And was able to capitalize on a little bit of a movement. It then retraced back up and now is continuing to fall. Now I didn't post anything about it, so I'm not gonna leave that one on the chart. But that was a kind of a good little breakout opportunity that just happened yesterday for a tiny little move. If I look at this on a 4-hour chart, we're sitting right now at our low on the 4-hour chart. So just kind of keep that in mind. Looking at it on a bigger chart, go all the way out to a weekly. And on the weekly, the thing that I notice is that we have broken this weekly trend line. It was a very weak uptrend. Frankly, it's kind of a rising wedge pattern, which is a pretty bearish pattern. Now, this is a big picture chart, but if we see some strength in the dollar, then this is definitely going to continue its fall, and I think there's room for it to fall all the way down to here. Okay, the euro, looking here at the euro has completely fallen off of our breakout area, so we had to look at this as a potential breakdown. It's completely fallen off this area here. It's a little late to get in on this move. Look at this on a weekly chart, and we'll see that it also has broken that weekly uptrend. So our uptrend has been broken on weekly charts on 2 major currency markets. And so, normally I don't go all the way out to the weekly chart, but I wanted to highlight that both of those uptrends have been broken. And so now I'd be looking for that retest. And our retest on this one is going to be right here. So right in here is going to be our retest possibility in the euro, that this could be a pretty good long-term trade to look at if that euro is going to continue its move down. Canadian dollar, not as weak as the euro, not as weak as the Aussie has been, so it's a little bit stronger, and it's got a little bit more connectivity to oil than just the dollar itself, and so it's chopping around sideways. So not a whole lot of anything to add here in the Canadian. Looking last and certainly not least at the Great British Pound, Japanese yen. So the pound, we talked about a breakdown below this area, and that move is continuing to occur on the British pound. So we got our breakdown out of here. So fair amount of weakness in this pound as well. I think there's room for it to continue to fall to that 1357 area. As once again, these currencies are all kind of showing me not all, but most are showing me a fair amount of weakness. Same thing in the yen. The yen broke below this line here, which I didn't have a breakout set up for it, but I think that there's still a decent move on this one. So on all of these currencies, I would look primarily, if you miss the breakout, look for a retest. Look for price to come back up into an area where you can get short. And I know a lot of people don't take breakouts. They only take retests, and that's okay too. The key is to be confident enough to get back in on the retest. But my problem with never taking a breakout is that you may miss a lot of really good trades, right? Here was a breakout in the Japanese yen, and then if you miss the breakout, you've still not gotten the retest. Let's say that here is another breakout, and if you miss the breakout, you may not get the retest. I found that most often in a really good breakout, I don't get the retest, and so I wind up missing out on what could be a really good trade and a really good opportunity. So that being said, I think today we are it's the Merry Berry month of May, and there's that phrase "sell in May and go away," and we'll see if the market does that this month. I don't necessarily anticipate it. I don't look that deep into the future. On our weekly time period. For the big picture of the S&P, we have put in a higher swing low, but we've also put in a lower swing high. So this is, just consolidation. It's pure and simple consolidation pattern. Our weekly chart last week gave us a fairly bullish candle, although closing weak, and so far we're down on the week so far this week. But certainly there's only one day that's gone through, so we'll see what happens for the rest of the week. If you've got any questions, please do me a favor. Don't hesitate to reach out. My email address is chuck@iiefinancial.com. Thank you so much for your time, and I hope you all have an absolutely amazing day.